I'm Eric Birch from miningclips.com, and I'm here with Eric Coffin, the Hard Rock Analyst. Welcome.
Thank you.
You know, we've been seeing some crazy trading over the last little while, and it seems that the U.S. dollar just continues to be the place to put your money, and it keeps going up week over week. How's that affecting gold, and do you think it's going to suppress that price going forward?
It's definitely affected all commodities. Gold is viewed as sort of as being the anti-dollar, if you will. That's a bit of I've always considered that a bit of an oversimplification. I mean, I sort of consider gold a currency in its own right, which means there's no particular reason why it has to trade against the dollar. It usually does, but the truth of the matter is, if you're in a gold bull market, it can actually go up right along with the dollar. And there's been a number of times I've shown people longer-term charts in my newsletter, and when you look at the correlation, it's not stable. It goes back and forth all the time. Right now, the correlations, it's probably close to zero short term, that they're trading somewhat independently. My expectation is that one, gold's going to get stronger. We'll probably trade, we'll trade up irregardless, but I'm also expecting the US dollar to start topping out here. I mean, there's two major things that determine a currency's value when you're looking at. There's no such thing as trading a currency. It's always pairs, right? So you're buying dollars, selling yen, buying dollars, selling euro, whatever. The two things that generally, in a medium-term sense, determine the value is growth rates, real growth rates, that is, ex inflation, and rate differentials. Part of the reasons why the U.S. dollar is so strong right now is the expectation, because the Fed's saying so, that they're going to keep raising rates all through this year, while everyone else has cut them to zero or less. So your rate differential is increasing. There's also an expectation that the growth differential between the U.S. and, say, the EU or Japan, the two main other currencies, is also going to increase. I'm kind of still a minority of one as far as I can tell. I don't think that's going to happen. My expectation is that the Fed's going to get a lot more dovish. The higher dollar is just obliterating the manufacturing sector in the U.S. And I know it's the fashion now to say that doesn't matter. It's just, dirty car manufacturing and stuff. Ooh, who cares? It's all about apps. But truth of the matter is, that's where a lot of the jobs are, especially the well-paying ones. You can't see a huge profit recession in all those sectors without impacting the market. New York is starting to roll over. I think New York sees a bear market this year. 30%, maybe more. I think there's a reasonable chance. The U.S. may not have an official recession in the sense of 2 negative quarters, but I think the odds of 2 negative quarters in the next 4, just slightly, like not 2008, but just basically flatline, it's fairly high. So that basically gets rid of most of your growth differential, that gets rid of most of your rate differential. I think the U.S. dollar rolls over, and I think that's going to be added to increasing discomfort in the financial system. And those two things together, I think we probably have a pretty good year in the gold market for the first time in 5 years.
It's certainly been a while. If those events take place, do you think we might see quantitative easing number 4 come into play?
A lot of gold bugs, and I don't consider myself a gold bug, notwithstanding what I just walked you through. I think that's the expectation. It's possible. I don't really have a lot of other levers. I'm not one of those guys that thinks the Fed raising rates in December was a mistake. To my mind, the mistake was not doing it 2 years ago, because they really have no cushion now.
Right.
So, really, if they were going to, are they going to go negative rates? I find that hard to believe. So it is possible you would see a QE4 if things get ugly enough. I'm not sure the economy is going to get ugly enough that that's going to be required, though. I'm not assuming it right now, and I don't think it's necessary for the market scenario I just outlined. QE4 would make it even stronger, but I don't think you need it for the market scenario I laid out. I think it's going to happen anyway. QE4 would just add to it.
Right. Well, here we are at the end of January, and we'll get those answers early March, I believe.
Oh, so I think they're coming at us, yeah.
Yeah, so they won't be too far away.
Yeah.
Tell our listeners how they can get in touch with you if they want more info.
Well, you can go and just type in hraadvisory.com. I'm just finishing off a double issue, and most of that issue is going to be actually editorial. I do this at the beginning of most years where I'm going through several metals, including gold. individually. But the editorial section on those metals, I mean, if you've gone to the site and just entered your name to be in the free list, you'll get that on a delayed basis after the subscribers see it.
Well, that's fantastic. I'll be looking forward to reading that. I'd like to thank Eric Coffin for joining us today. For miningclips.com, I'm Eric Birch.
Thanks, Eric.